John Stoltzfus with us now. He's with OpCo, with Oppenheimer, and we're thrilled he could be with us. He's been a bull that's nailed this over the last 4, 5, 6, 8 years. John, I believe you lowered your S&P call, which was way out there somewhere, as Linda Ronstadt said. But if it was out there, John Stoltzfus, are you still a bull as you cut back your view?
Yes, great to be on the show with you, Tom. I have got to say we remain bullish. We just had to trim the target because the depth of the selling was such that we would have had to have about a 30% upside from the bottom, and instead at 59.50 down from 7,100 as a year-end target for the S&P 500, and having reduced our earnings projection from 275 to 265. We feel comfortable here, right-sizing expectations based on the damage that has been done related to sentiment in certain pockets. We don't think it's just about fear and greed. We think it's fear and greed is always in the markets, but on top of that, there's need to invest for serious purposes like retirement, kids' education, in retirement, all kinds of things like that. As well as you have, based on innovation in technology, we believe we're in a watershed period on the timeline of financial history here and manufacturing history with what AI is eventually going to do. So we feel comfortable, like John McLaughlin, I think it was his second album, Our Goal is Beyond where we are right now, but we're quite aware of what's happening.
He's so sophisticated.
Yep.
I can't keep up.
No.
John McLaughlin had a scalloped neck. Like between the frets of the neck, he had the wood scalloped out.
Really?
To get it better in a different tone.
There you go.
I mean,
And that does what for me?
John Stoltzfus can do that.
Hey, John, it's just, I'd love just to get your perspective. You've been in the markets for decades. What did you make of the selling over the last several days here?
What did I make of the selling?
Yeah.
It looked like the negative pitch book. Generally speaking, when something happens that creates a catalyst for bears, skeptics, and nervous investors to sell without FOMO in what is likely a secular bull market, you get that kind of thing. You bring out the negative pitch book. It gets negativity to infinity is projected. The market gripped with fear in the trading community. A lot of people are looking, I would think, based on the selling, probably looking for their next vanity plate on their next trophy automobile related to selling in this kind of a period. But for investors, just as your prior guest said, there's the opportunity to look for, we've been saying it for a long time, babies that get tossed out with the bathwater. We don't think it's a buy the dip moment. We think right now it's shopping list. We like what's been beaten up the worst of the quality sectors, infotech, communication services, consumer discretionary. Yeah, they'll keep shopping. And then financials and industrials, which we think are pivoted well for where we're headed once we get through this very uncomfortable period where the tariffs were just simply priced too high for the market to digest without some pretty serious indigestion. We don't think it was a tantrum. We think it was a genuine protest that this was a bit much. It's tariffs 101 in the administration's previous run were one thing. Tariffs 102 during the Biden administration, one thing. But this was tariffs 401 or maybe graduate studies based on the fact that it's really been over 100 years that we've lived with this kind of proposition in tariffs. There aren't anybody, I don't think anybody is around who's alive or knows that they're alive who remembers this.
Is Mag 7
this kind of a period? So.
Is tech an opportunity here? I mean, they were trading, 38, 39. I got Apple with a P 25-ish, 26-ish. Is tech an opportunity, John Stoltzfus?
We have to think so, Tom. We're all on the upgrade cycle. Without naming the company, I was in a big store where they sell technology yesterday, and I upgraded my personal phone because I wanted to be sure I had the latest chip in my phone.
I saw him on Fifth Avenue.
And I also want.
Well, let's stop. We need to stop the show here. If John Stoltzfus upgraded to the iPhone, whatever, that leaves only one person left on the planet who hasn't upgraded. John Tucker, will you upgrade because John Stoltzfus has?
No, the BlackBerry is staying.
Flip function is classic.
I mean, John, I know you don't do individual stocks, but a lot of people are in these things. Not to be trite about it, there's some real losses taken out there. As we said to Cam Dawson, are we still in a bull market?
I believe so, and I believe it's related to that watershed period on the timeline of manufacturing history and technology's history that revolutionizes things going forward, and that will bring its own questions and agony at different points when we take a look and we see the disruptions within industries, whether it's in hiring or businesses that don't adapt well to the new world. That's a whole other story up ahead. But overall, the market's going to be looking for what builds earnings growth. Where does revenue growth come from? That's what the market really cares about, and that's what appeared to be very much in danger near term on April 2nd when the tariffs were brought into the showroom, so to speak.
Hey, John, what have you done with your S&P 500 estimates?
Yeah, with the S&P, we went from 275 earnings projection to 265. So, it's definitely a haircut on that. And then we went from 7,100 as a price target year end to 5,950. Still looking for we're looking for about 17% upside from where we were on Friday, which is sort of parallel, if you think about it, to where we put our target on December 9th for this year. Last year, we put it in for this year, and we were looking for about 17% upside from that level, which was pre the peak of February, February 19th. We were looking at 71, thinking that was rather conservative based on a year where we'd seen, a pair of years at around 23%. Respectively for 23 and 24.
From where we are right now, that John Stoltzfus call is up 13.8%. John Stoltzfus of Oppenheimer Company, thank you so much.